Thursday. I'm Alec Hogg, and here is our monthly update of the BizNews.com global share portfolio. Just by way of introduction, for those who haven't been following us over the last little while, what we did was we started with $200,000 that was invested into the BizNews share portfolio onto the Webtrader platform. So we have the Standard Bank Webtrader, which is a fantastic facility that can enable us to invest in many stock markets around the world. And this is really a way to start helping people to invest, a bit of a hand-holding, to put together a model portfolio so that we can then see how that portfolio performs after all costs, etc. It really is a fantastic system, and clearly we've been very fortunate. This is a long-term portfolio. It's meant to be held forever, never to be sold, and never for any of the shares to be sold. Of course, sometimes shares do go a little bit out of kilter, and you can then take a decision. But even though share prices are very high at the moment, that isn't something we're doing. Anyway, the model portfolio then has made certain investments, and I think let's just have a look at the structure on the next graph. I'll get this up in a second. There we go. And that shows you the account overview. The account valued is now at $208,000, and of that, $176,000 has been invested in equity positions, and we still have $32,000 that is being held in cash. Now, on the cash component, it depends very much on what we are able to find as a stock selection, but this is probably the best way to look at it. There's the account overview. Those are the shares that are held in the portfolio: Amazon.com, Berkshire Hathaway, Google, IBM, Novo Nordisk, and Vanguard. And the intention is to invest roughly a third in Vanguard, roughly a third in these two stocks, 15% each, Berkshire Hathaway and Google, and then to have 5 stock picks. Amazon.com, IBM, and Novo Nordisk are the first 3 of those stock picks, and they would absorb an investment of 8% of the portfolio each. We'll get into more details in a moment, but that's the way the portfolio has been structured. So you might have heard about core and satellite portfolios. Well, the core here is the S&P 500, in other words, the index, the exchange-traded fund, very, very cheap, the way in and out. So we've looked at costs in a big way, and as you'll see a little later, the Vanguard fund closely tracks what happens on the S&P 500, that overall index in America. Then we've taken another third into our 2 core holdings, our 2 foundation stocks, and those are Google and Berkshire Hathaway, and then we'll have 5 share selections. Now, you can do this yourself. You can actually make these investments anytime you want to through the Webtrader platform. That's what this is all about. Okay, so much for the background. Let's have a look at how our portfolio has performed in the past month. In fact, in the, about 4.5 months to date. We started on the 5th of December, as you can see over there. It is now the 23rd of April, so give or take a few days. We've been going for about 4.5 months. And this is in US dollar terms. The Vanguard portfolio, we've got 318 of those shares, or of those units, and they cost us $188 each. They're now at $193, so not a huge increase there. But in terms of this table, what we wanted to reflect here was the portfolio, the percentage of the portfolio, and how it has performed at the moment. So if you have a look at this table closely, you'll see the target for the S&P 500, in other words, the exchange-traded fund, is 30%. Very important, by the way, to have a look at the codes that are after these stocks, VOO:ARCX for the Vanguard S&P 500, because they're various types. Google has got a few different shares. Berkshire Hathaway has, of course, got A's and B's, and so on. So you want to get those codes absolutely right. So when you are buying or following our portfolio, you buy the correct shares, and that is particularly important when it comes to the exchange-traded fund. Okay, so 30% is held in Vanguard. There's the target, 15% each. Berkshire and Google are both at 14 in the current portfolio. That's primarily because we've had fantastic performance from Novo Nordisk and Amazon.com, 2 of our share picks. IBM has been pretty stable there at 8%. we still have, as you can see, of the cash components, we still have 32,000 that is sitting there in cash. Let's move on to the next one. This will give you the rand figures, and this is for South African investors the critical issue. At the 5th of December, when the portfolio began, we had 11 rand 27 cents for each US dollar. As you can see, the rand today is at 12 rand 28 for each US dollar, and very easy to have a look. The cash has stayed unchanged at 32,356, and that is a 9% appreciation in rand. So even if we didn't do a thing in the portfolio, even if we just put all the money into cash, we would have been 9% up. And in many ways, offshore investing is trying to do that. It is based on an opinion, it's on a view that we have that the rand is a weak currency and likely to remain weaker into the future. As you can see, call it 5 months if you like. The rand has depreciated by 9% in those 5 months against the US dollar. That's running at 20% a year. Very scary if you happen to be an importer or somebody who uses imported products in South Africa, but very attractive if you're an exporter from this country. It will paper over many, many problems that you might have in your business because the rand continues to depreciate. We can get into a political issue, an economic management issue on that one. If you read BizNews, you'll know that we think the economy is not being well managed. We think that the development state is going to ensure that the rand remains a weak currency until the political management or the economic management changes to take account of the economic or the world, the global realities. But that's politics, and we're not really interested in politics. We're just interested in an overall view. And as you can see here, our view is that the rand will remain weak, and that's primarily the reason why we should be looking to invest in offshore equities. Justin is sitting here with me. Justin.
Hi, Alec.
And you're watching the questions.
I am watching the questions. None have come through just yet.
How do you put the questions in?
If you go to the GoToWebinar control panel on the right-hand side, you'll see there's a little drop-down menu that says questions, and below it you can just type in your question. That'll pop up over here. I'll pick it up, and then I'll ask you, and you can send back the answer.
Fantastic. So there's your invitation. Please ask away on your questions. As you can see, the portfolio in rands is up 13% in 4.5 months. That translates to about 30% annualized. Wow. I wish I could be in making those kind of returns on all the investments that I made. It's been a fabulous start. And remember, this is not a portfolio that we're suggesting that you buy to trade. This is a portfolio that you buy to hold. 30% to me is at the current inflation rates. If you're doing that over even 3 years, you're ahead of the game. So in 5.5 months, we're at a position now where we would have been quite comfortable in the next 3 years. Of course, we're going to try and do better than that, but the reason for this is quite obvious. The Vanguard, which is on the American stock market, the S&P 500, that's 11%. So it's been a little bit better than what the rand has given us. You're a little bit ahead in cash. The idea here is to try to avoid losers in the long term and to actually try and get lucky with a few winners. At the moment, Berkshire Hathaway has been disappointing. It's a 4% gain. So in fact, as you saw in the previous chart, in dollar terms, it's cheaper today than when we bought in. So that's a big tip for you. Google it came back very, very sharply in this past month. We'll talk about that in a moment. Novo Nordisk had a fabulous month, up 33% now in the 5.5 months we've held it, 4.5 months we've held it. IBM a little bit ahead of the game. The results were out earlier this week. We'll talk about those ones too. And then Amazon.com, well, there's another one of our stars. That's up by 30% since we purchased. And this has been a real bouncer. It was down significantly after our purchase price, and then it's shot up because of the opportunity there. Anyway, as you can see, the bottom line, 13% improvement in cash. Okay, let's move on. Remember, you can ask those questions. Justin will pick them up. Here's a better look at it, the individual stock performances. Rand dollar has depreciated rather by 9%, appreciated for us because we took our rands over, converted them into 200,000 US dollars on the 5th of December. And there are the gains and losses, well, no losses, thankfully, but there are the gains in the various allocations that we've made. Nice work, Novo Nordisk and Amazon. Okay, let's get into the guts of the portfolio, starting off with Vanguard. Vanguard is a very low-cost exchange-traded fund. I love the idea of putting money into exchange-traded funds as a core of your portfolio. We've got 1/3 in Vanguard. Of course, it's going to track the market. So what it's saying to us is that the share selections we make around it have got to be better than what the market overall does. Otherwise, what's the point of saying to you, have a portfolio? Now, for the know-nothing investor, you can put 100% of your money into this Vanguard fund. In other words, if you are scared of having individual shares, that is fine to just buy the market. What we're trying to do is to outperform the market. Not many people do that. If you take arithmetic will tell you that on average you get 50% of the asset manager will beat the market, 50% won't. But then there's costs involved. So that means that the actual percentage of asset managers who do outperform the market over an extended period of time is only 30% or only 1/3, because when you add the costs in, they've got to do so much better just to beat the market overall. So that's what we're trying to do in this portfolio, and to have a bit of fun with it as well, almost earning while you're learning. There you can see the performance of the S&P 500 index in the past month was pretty flat. And Vanguard followed it as well. In fact, Vanguard was a little bit better than the S&P 500 index. I'm not sure why that would be. Maybe accumulation of dividends, and it's up by about 1/3%. So flat in the last month, nothing to write home about there. This man, our role model, Warren Buffett, says you should trumpet your disappointments and be modest about your successes. We'll be following in his view here because of all the selections we've made in the portfolio. The disappointment has been Berkshire Hathaway, and it came through pretty much in this month. This has been the time that that Berkshire really has not performed. As you can see there, the S&P 500 was flat. Berkshire was down by 2.5%. But I really have no concerns, and the reason for this is that the Berkshire Hathaway AGM is going to be held within the next couple of weeks. It's in Omaha, the first weekend in May, and when the Pilgrims get together, this year is the 50th anniversary of Warren Buffett running the company. When the Pilgrims go to Omaha, they usually get all fired up and then come home and buy some more of the Berkshire shares. So I'm expecting that when we talk in a month's time, you will see that this share price has risen. So there's an obvious tip here. If you are looking to follow us in this global share portfolio, it's a good idea to be buying into Berkshire Hathaway today, because you're buying them cheaper than the price that we paid. Only slightly less or slightly more in rand terms, but in US dollar terms, you can actually buy these B shares cheaper than we paid. B shares and A shares, why is there a difference? Well, the A shares are the original shares that were listed in Berkshire Hathaway. Some years ago, Warren Buffett was convinced to make it more affordable for ordinary citizens. The A shares are trading at hundreds of thousands of rands just for a single share, whereas this one is, as you can see there, $142 per share. It's still quite a lot for a single stock, but at least you can go in and buy them. Okay, we don't, just no questions
No
yet.
questions yet, no.
Okay, a lot of people online here, so maybe I'm giving you all the solutions you need, but if you would like to ask a question, just go and click on that button and Justin will be able to pick it up and push it through. That's Berkshire Hathaway, our disappointment. Google's come back sharply in this period. As you can see, the share price was sitting at a significantly, well, in fact, about 5% above where it's ended the quarter. So we had Google coming back by 5%, and this has also affected the portfolio's performance. It's a big day today that because we have two of our constituents in the portfolio, Google and Amazon, both issuing their quarterly results. Now, as far as Google's concerned, it's also launched into the United States today a wireless mobile service, which is showing its intentions to get deeper and deeper into the mobile technology area. This is a game changer potentially, because up to now, when you buy data on your mobile phone, you buy a bundle, you buy a package. And if you don't use it all at the end of the month, well, you lose it. Google's new approach is that you only pay for what you use. So it's almost like per second billing on cell phone voice calls. That's what Google is doing to the data calls. Now, one hopes that they bring this into the South African market in the near future, because we clearly can also do with some help on reducing the number of or the costs on telecoms. They're doing that today in the United States. They're also coming out with their earnings today, their quarterly figures. There's going to be undoubtedly some pushback from the stronger US dollar. We saw that in IBM's results that came out earlier in the week. In fact, they were out on Monday. That is starting to affect the American-based companies. But the analysts are expecting that Google will come out at about a 16% growth in its revenues. The Americans love to watch revenues. It'll tell us a little more, no doubt, about Google Glass being a problem, that Google Glass was a failure. And then we'll also get to hear what they think about the EU Competition Commission investigations. Justin, I see there's there are a couple of questions that are now starting to come through, and one of those, there are quite a few questions. I'm not sure if we picking up. Oh, sorry, my apologies. I see it's only to do with the volume bars and people trying to get technology issues and.
Right, so that would be going through to the guys at the GoToWebinar side of things. Okay. I'm not seeing any questions on this side.
Okay, cool. Right, so we are wide open for questions. So if there's anything that does tickle your fancy here, please just to put it in. Remember, we only have a half hour on the seminar, so usually what tends to happen is all the questions come at the end. Let's try and get them a little earlier if possible. So there's Google, and we have Google's reports coming, a quarterly report coming out today. I think we might find, well, we're certainly going to find that the share price will react to that. Last time around, Google did beat expectations. Let's hope that they do it again. But remember, this is a longer-term investment. Here's the stock that moved very sharply as a result of its last quarterly earnings report. And it's also coming out with earnings today. Let's spend a little bit more time on Amazon.com. It's anticipated that they are going to be disclosing for the very first time what Amazon Web Services are doing. Now, up until now, that's just been bundled in amongst a title called Other. And American analysts are very excited about being able to see what Amazon is doing, in fact, in this huge growth area into the future. Cloud computing is big. Very, very big indeed as an opportunity for Amazon, and they are big in this area. They started about 7 years ago in cloud computing, and the rest of the market has only just started picking up. So they can't believe that they were given the opportunity that they had. They're generating about $6 billion a year in revenues from cloud computing. It's small compared with $83 billion that they get from their e-commerce operations, but it is very big relative to the competition. In fact, the closest competitor is one-tenth of the size of Amazon, and that's Microsoft. So Amazon's had a head start here on the cloud business, and it is something that is expanding all over the world. We'll hear a little later from IBM that they're also taking a big bet on cloud. Jeff Bezos, the creator of Amazon, says that cloud could eventually be bigger than the e-commerce business. The way it's growing, it's going to take a few years to do that, but it is really increasing rapidly. As a result of that, they're going to start breaking it out in their results today, and there are 1 million active users of the Amazon Web Services. It is an area that they're going to be expecting will be generating lots of revenues into the future. As you can see, the market has anticipated some good numbers from Amazon today. Share prices moved very strongly in the last couple of days, up by 4% in the month, and substantially outperforming the NASDAQ, which itself was 0.5% better. Amazon's expected to produce revenues today of about $22 billion, and to show a loss of 12 cents a share. But in the last quarterly results, they were expected to generate 17 cents in earnings, and in fact posted 45 cents. So, and that was after a disappointing third quarter numbers. Amazon can really turn the dial any way it wants to. If it looks at the market expectation of 12 cents, the 12 cents loss. If the number comes below 12 cents, you're going to have to start worrying a bit. It will probably knock that share price back. But given what they did last quarter, I would be quite confident to see, although the shares are at a 52-week high, that they could get even stronger. Amazon.com is also, particularly in the cloud service area, hiring people at a rate of knots, just like Facebook. We got Facebook's numbers out this morning. They have added 48% to their staff complement in the last year. Imagine that, 48% more staff at Facebook today than they were a year ago. Amazon are also at a recent seminar was saying, one of their top guys was saying that the engineers are now spending around a third of their time finding new talent, putting on new people onto the books rather than focusing on the business itself. It just shows if you're in the right sector and in the right sweet spot in the world today, the sky's the limit. Moving on to our next portfolio holding, and that's IBM, International Business Machines. This comes from Armonk, New York. Their results were out on Monday, and it's nice to have a look back at why the market liked them so much. They pushed the shares up by 3.5% on the news. IBM is a company that's been around a long time. It's an old business in many respects, and what it's trying to do under the custodianship of the CEO, Ginny Rometty, who's been there now for 3 years, is to move out of those old businesses into new businesses. She's taken some huge bets. They've sold off some of the massively commoditized businesses. They've also reduced their reliance, or trying to reduce their reliance on things like hardware and services and even software, and they're going big into the cloud computing services where their revenues are growing by 75% a year. The problem is IBM is so big. It is such a huge organization, turning over $80 billion a year, of which it makes about half of that. The gross profit margins are nearly 50%. So it is one of those companies that really is in a position that can, it's locked into its business at the moment. Can it grow quickly in the new areas that it's investing in, or quicker than it's getting out of the businesses that are in the longer term not going to be growth businesses anymore? That's the story with IBM. Everything has a price, and this is why we love this company. Indeed, this is why Warren Buffett loves this company. Of his core holdings, the only one that he increased in the past year was IBM, and he made a big bet on this company. We think that the opportunity on the cloud side is huge, and we're seeing Amazon itself splitting that out. We're seeing Google getting into that market. Also, Microsoft, of course, is there as well. Cloud computing is a business where instead of having all your computers on site, you now, with the internet being more and more efficient, you now put your a lot of your software and your hardware and your data into the cloud, as they call it. So it's off-site. Who benefits most from that? Well, those people who've got a global reach, who've got great analytics, who've got good security, and who's got scale. And if you add to that, and IBM has all of those things, if you add to that the fact that IBM also produces mainframe computers, incidentally, mainframe sales doubled in the past quarter compared with the same quarter last year. That's a direct impact of how the world is moving to cloud computing. IBM's well positioned in that regard. The hardware sales overall were down 23%, but the mainframe sales, these are those very powerful computers that will drive things like the cloud and the mobile technology. It has to be housed somewhere. That has been growing very rapidly. So you've got two big areas of improvement for IBM. Also Watson, which is its next generation artificial intelligence bet, named after one of the co-founders, well, the two names in IBM's history that stand out biggest are both Watson Jr. and Watson Sr., the one who succeeded his father. They have named this artificial intelligence computer after Watson, and it's all to do with big data. They've got a recent announcement on a partnership with Apple and Johnson & Johnson in the medical field. So there's lots of ways that IBM can kick in into the future in its growth areas, but the weighting here, or the balance here, is can they move across without losing too much on the old businesses, if you like, before the new businesses kick in. It reminds me a lot of Naspers. It really does. Naspers was a similar business that had its old printing and newspaper companies. Then it made some investments in the internet, and of course it hit it big with 10 cent, and Naspers, of course, has exploded, the share price, out of all proportion. What could happen with IBM? It certainly isn't beyond the realms of possibility. As far as IBM's share price is concerned, well, in the last month it did pretty well nothing. It bounced around a little bit, but it's up 0.5% relative to the S&P 500 index of about 1/5 of 1%. So not too much change there. As you can see, a big move in after the results were released. At that point in time, it jumped 3% in the day, and it's held on to those higher levels. IBM, one for the future. If you've just joined our portfolio or want to follow us now, that's an obvious one for you to invest in as well. Hasn't moved much since we bought it. And here is the star of the show once again, Novo Nordisk, a 14% jump in the past month. Primarily, as you can see, it was early in the month, and what happened there, Novo Nordisk, so that you can understand it, is the world's biggest producer of insulin products. Insulin directly related to lifestyle diseases, and it has a very strong business that keeps churning out the cash. It's invested in insulin many years ago. It's now able to keep the price increases at a manageable level, which keeps competitors out. It owns 50% of this market, and insulin is something for those people who are diabetic, where you have to get the right balance of what insulin you're using is quite a process. So it means once you've got a particular type of insulin, and in this case Novo's, it's likely a 50% chance that you're going to have one of their products, well, you kind of stick there indefinitely. In the past month, what caused the share price to jump was Tresiba got the green light. This is a key insulin product which they've been trying to get into the United States. 2 years ago, the United States FDA, Food and Drug Administration, blocked it. They wanted more information. They were concerned that one of the side effects of Tresiba was that it would create strokes. Well, Novo Nordisk did a separate study just checking on that side effect, and the FDA is happy enough with the results 2 years later to say, sure, you can launch it in the United States. Tresiba is available pretty much everywhere else in the world, but to get into the United States is a massive move for this company, as you can imagine, with insulin and the obesity issues that are going on in the US. This is a very important market for anybody, particularly in that line of work. And then the other big bit of news was that the anti-obesity drug Saxenda was approved in Europe. So you got these two, about just under a month ago, these two bits of very good news that came out for Novo Nordisk, and hence the share price jumped 10% in a couple of trading sessions. Saxenda has now been launched in the United States. The company, which is Danish, Novo Nordisk, is saying, don't get too excited about it, because it's going to take a while for this anti-obesity drug to actually kick in, but they have taken 500 of their 3,000 sales force in the US to market the drug, and Saxenda is one of the few anti-obesity drugs that's now got just pretty much worldwide approval. It was approved in the United States in December last year, approved in Canada in February, and now in Europe just towards the end of last month. The other bit of good news to come out of Novo Nordisk is that the company has announced a 26 billion rand share buyback program. So it's going to be in the market buying its shares. Usually that tells you that the underlying base of the share price at the moment is pretty stable. Nice story, isn't it, for Novo Nordisk? If you didn't come in with us, it's as you can see there on the portfolio, Novo's up by 33% since we bought in December, and it actually took a little while to get going, but now that it's got gathered momentum, it's at a 52-week high, and with lots of good news coming through there. We're expecting that there'll be quite a big cash dividend in the near future from Novo Nordisk. You also have a very good run there by Amazon.com. We'll know more about that later today, as we'll get some further insights later today from Google, both of those issuing quarterly reports. Berkshire Hathaway, I'm very comfortable that when the Pilgrims come back within the next month from their annual visit to Omaha, more than 30,000 people getting together there, that they will just have a bit of a feel-good factor and probably bump that share up as well. And then IBM, a good long-term bet, and progressively making strides. It's been a huge turnaround over the last 3 years, but there's signs there that they've made the right kind of bets, and although it will take a little while to go forward, it is a stock rather, that can be bought very confidently at this point in time. Well, it seems as though we have answered all your questions, because there aren't any. I know there are a lot of people. I can see there's quite a lot of people attending this function. Perhaps we are just giving you the kind of insights that you need, and then you can think about it a little bit more. You're welcome to email alec@biznews.com, or indeed to talk to the guys at Webtrader. They'll be able to give you further insights. Well, it's been a pleasure, as always, to be in your company. You had an easy job today, Justin.
Indeed, I did. Just maybe a reminder that this will be published on biznews.com, so come check back this afternoon or tomorrow morning.
Yeah, Stuart from Standard Bank is also taping it all. What would you call it? Not taping, it's an old word, isn't it?
Yeah, recording, I guess.
Recording, yeah, tapes, sure, showing my age. You know, Justin, when I started in journalism, after a while I worked for the SABC, and you literally had to record on big tape machines. So you'd do the editing on these. It looks like, I don't even know if they have them in mainframes anymore, but it's those tape recording machines we had to actually cut them with a guillotine, and then put sticky tape on them, and you would hear between the one person spoke and the other. So no more taping. It's called recording. Thanks very much. We've got a couple of people saying thanks for the seminar or for the webinar today. It is our pleasure. If you'd like to go over it again, you will be able to pick it up, as Justin says, in the next couple of days.
Yeah.
Thank you, and thanks to our partners at Standard Bank Webtrader. We'll be back again in a month's time. Look forward to being in your company then, and let's hope we can have more happy hunting.
Cheerio.